Shall we start the session, guys?
Yes, sir.
So thank you. I think 31 students have joined, and anyways, I have covered this concept. So let me just, in the meantime, when they are joining, let me recollect what we are discussing. So this is a concept of clean price and invoice price. So generally, what happens sometimes when the dealers are quoting the price, when they are quoting the price, they will add accrued interest till the time when they are selling the bonds, and that is called invoice price. So the clean price is the price we calculate using the present value of all the expected cash flows plus the interest accrued, that is invoice price. So in this question I think we had discussed, and Dhruv had helped us also, if I remember correctly. uh, the the invoice price is given 950, so 950 includes the accrued interest. Now remember, the bond has a coupon of 5.2 percentage. There are 2 months to the next semi-annual coupon date. So after 2 months, it means that after 2 months, you are going to receive the next semi-annual coupon, right? So can I say that this invoice price includes 4 months accrued interest, because this is an invoice price, this is a dirty price. Hello, are we? Can you hear me, guys? Everyone is able to listen to me? Are you? Can you hear me, guys? Someone.
Yes, sir.
Hear you.
So we are just recalling what we had discussed because others are joining in the meantime. So please mute yourself because some background disturbance is coming, please. Okay. Hello.
Mute him.
Let me mute everyone. Yeah. Okay, guys. So this invoice price, when the dealer has quoted, it includes interest accrued for 4 months, right? Because the 4 months have lapsed and 2 months are left for receiving the next coupon. When he's charging this 950 rupees to the someone who is buying, right? He's going to include the interest on this. So this 950 includes that, right? So it's a very simple calculation. For 6 months, the coupon is 52. How did I get 52? 1000 is the face value into 5.2 percentage, that is 52 is the yearly coupon, right? Now we are talking about only 4 months accrued, right? So 4 by 12, that comes to 17.33. So 932.67 is the clean price, and invoice price includes the interest till date, right? Interest till date. So I hope you are able to recall this. We had discussed last time. Let's look at another question, 23rd question. In this question, you are given the clean price. So clean price plus the interest would be added, right? So again, the coupon is 59, 1000 into 5.9 percentage. Now, if you read the question, if the next semi-annual coupon payment is due in 4 months, so that means 2 months have lapsed. So 2 months interest he would charge. So 59 into 2 by 12, that is 9.83. So the invoice price you can say, or dirty price you can say, is 993.83. In simple words, invoice price and dirty price includes the interest accrued till date when they are selling the bond, when the dealers are selling the bond, right? So that is what it is. Yes. How 2 months in question 22? Because see, in question 22, 2 months are there are 2 months to the next semi-annual coupon. Are you asking about 22nd or 23rd, beta? Ankita?
22nd, sir.
22nd, right? So you see, in 20, just a second, beta. In 22nd, there are 2 months to the next annual coupon date, right? So let's say today is time 0, right? And after 4 months, how many months are left for receiving the next coupon? 2 months. So that means 4 months have lapsed. So that is why, if you see the calculation, I have added the interest for 4 months. Why? Because 2 months are left for receiving the next coupon. So how many months of interest must have been added into this invoice price? 4 months. Right, Ankita? Did you get it, beta?
Yes, sir.
Yes.
Yes, sir. Got
So
it.
जितना पीरियड गया होता है ना, पास हो गया होता है ना, that is the accrued interest. Accrued interest means the interest has been built upon. The interest has been.
Excuse me, sir.
Yes, please ask question. Yes.
Sir, in this we have assumed the price of the bond to be 1,000, right?
It is always 1000. Whenever no information is given, the bond price in US is always 1000, unless some
Sir, actually,
information is provided.
I did this question by some another way. Actually, I assumed the clean price to be X, and then the accrued interest become 5.2% of X for 4 months.
Okay.
And from that, I'm getting the answer as 933.81. So
No, that's the
is it
wrong answer,
done?
because you are assuming that the because you when you put X as a value, as a clean price, you are assuming that when you're assuming X as a face value, you are saying that you do not know the face value. In this question, you know the face value. Whenever the invoice price or anything is given, generally the bond prices or the face value is always 1,000. So let us keep it very simple. The face value is 1,000 rupees, beta. Whenever no information is given, the face value is always 1,000. Because you have assumed X and then applied percentage on X, of course it is going to be wrong, right? Because when you know X, why are you assuming as to be X, right? I hope I'm
Okay,
making
sir.
sense. Hello?
Yes, sir. Yes, sir.
Yes. So once again, I'm repeating, whenever the invoice price and clean price or whatever price is given to you is around 900 or 1,000 or something, assume that the face value is 1,000. Right? And whenever no information is given, bond face value is always face value, call it, or par value you call it. It is 1,000. So it's fine if you have assumed and did it, but that's a wrong approach, right? So in this question, 1,000 into 5.2 percentage is 52. Coupon for 1 year. The accrued interest is for 4 months, so that is 17.33. Already added into the invoice price, so the clean price must have been 932.67, right? Let's go to the 23rd question. In 23rd question, you are given the clean price 984, and then you will add the interest on it, right? Okay, someone is joining, Pratik Agarwal. Okay, so clean price is given, and that means the accrued interest has to be added by the dealer when he's charging the price, right? So because the coupon is 59 for 1 year, and he's selling this after 2 months, right? So the interest must be accrued or added for 2 months. 59 into 2 by 12, because 59 is for 1 year. 9.83 would be added, so that works out to be 993.83. That is the invoice price. Yes, any question, please ask.
Sir, but we also added interest in 20 question.
Sorry,
We also added interest on 22nd question, but it was an
we
invoice
deducted
price.
we deducted. If you see, we deducted.
Okay, sir.
Huh.
Sorry.
Invoice price minus interest. So this is the formula. So if I go backwards, of course I have to deduct. So because invoice price is already including the interest, I have to minus, because I'm finding out the clean price. And when I'm given clean price and I'm supposed to find out invoice price, I have to add interest. So that is why the questions are different. So just read this question one more time. This is very straightforward question. The only understanding you need to have is that the clean price is the price we usually calculate, and the dirty price or invoice price is the price with interest being added into it, right? So that is something you have to remember. And how do you get rid of it? That is something you just have to apply how many months have lapsed, and proportionate interest should be added or deducted based on the question, right? So I will just rush through this question because we have discussed similar questions. I thought of doing this question because the information is given in a table, and in real world, usually the information is given in a table. Information is given on the website like this, in a table like this. So you are given the ticker IOU. The coupon price is given 7.240. That is annual coupon rate. Remember that. The maturity is April 15, 2026. So after we will see how many years. The price today is 105.312. That is always given in percentage. Always remember. The reason why it is given in percentage, because someone may have quoted, or some bonds may have a face value of 1,000, some bonds may have a value of 100, some bonds may have a face value of 10,000. So I mean, it becomes very difficult for the investors to understand whether the bond is trading at a premium or discount, because the bond may have a premium of 100%. We don't know, right? So that is why they always put prices in percentage, right? You are supposed to find out the YTM. That is the question. This is not material right now. This is the amount of volume being traded at a given point of time, right? So let us read the question. Suppose the following bond quote for IOU Corporation appears in the financial page of today's newspaper. Assume the bond has a face value of 1,000. Anyways, we were going to take 1,000 even if it was not given. It pays semi-annual coupon. So that means the interest is paid every 6 months, twice in a year. The current date is April 15, 2015. And remember, it is maturing on 2026 on the same day. So that means there are 11 years. 11 years, right? Calculate YTM and current yield. That is the question. How do I solve this question? Now I want participation because we have done a lot of questions now and you are also practicing. Please help me. How do I solve? Anyone, please participate because
So for YTM, तो we will directly use the rate wala formula.
rate wala formula, but what is the logic applied when you do it manually, or maybe what is the construct of behind using that formula, please?
So basically we will be discounting. In the actual formula, like, should I tell how the values will be put or what will be the values?
I'm asking that what is the logic
What is
applied?
the logic of using that?
Yes. What is the logic for calculating using any formula, manual formula, mathematical formula, or Excel formula? Okay, fine. You think about. Yes. You want to go?
I don't know, sir. I don't know what to answer actually. I didn't get the
Sir, may I
question.
try?
Please answer, please.
Sir, in manually, we first discount with the assumed rate, means the rate we do trial and error method. So we take any of the percent, that is either we have always started with 3% in previous questions, but any of the percentage can be used. And basis on that, we will discount the 1053.12 to today's value, and also all the coupons that are available will be discounted. So it should be zero. That is, the NPV should be zero. Then only it will be considered as the exact rate, which is YTM. If it is not zero, it's coming more than that, then we have to decrease the percentage or increase the percentage accordingly.
Yes, thank you, Mayur. So that what I was asking is that what approach we are following. So the idea we are following is that, remember, the coupon is 36.20. How did I get 36.20? I got 36.20 because the interest rate, coupon rate is 7.240 on this bond, and it is paying interest or coupon every 6 months. So that has to be adjusted for 6 months. So I will say that 7.240 on the face value of 1000 works out to be 72.40 coupon for 1 year, but we are receiving the coupon every 6 months, so that is 36.20. So this is the construct. This is what I was trying to ask you. The idea is that YTM is that rate of return at which if I discount the 36.20, this will make us easy to understand. All these 36.20 and 1000 face value, the rate at which if you discount, let's say the rate is X, the present value is going to be 1053.12. So the idea is that when I am paying 1053.12 bond price today, I'm expecting 36.20 for 22 periods, and I'm also expecting 1000 at the end of 22nd period or 11th year. That is the construct, right? So you can do that manually, as I said, because remember, this 36.20 you are going to receive every 6 months. So you can use the present value of annuity formula. So you will do this thing, that you discount 36.20 for 22 period. Why 22 period? Because 11 years are there, so that means 22 periods are there. The interest coupon is paid twice in a year. So 36.20, for 36.20 you will apply present value of annuity formula, and for 1000 you will apply a simple present value formula. So if you solve both, the present value should be 1053.12. So if you are using the Excel formula, as Anjali was pointing out, this is the formula: rate bracket NPER. NPER is 22 periods. Why? Because 11 years into 2, 22 periods. PMT is the coupons, 36.20. Present value is 1053.12. That is what I'm paying today, and I am expecting to receive 1000 also. That is the face value. I have put face value, that is the future value, and the PMT with negative, because when I'm investing this, I'm going to receive this. So PMT and face value always have the same sign, and present value have a reversal sign to face value and PMT. That is how you have to write in the Excel. So the answer is 3.277. Mayur was saying that you can also do this manually. And so how do you do it manually? You do this thing. Just a second. you discount all these cash flows at two different rates and you see what is the present value, right? So if I'm doing it, I have already done it. If I'm discounting 36.20 for 22 period and also the face value you receive after 22nd period, the present value is 1098. Remember, I'm looking for 1053.12. That is the discount rate I'm searching for, right? And if I'm discounting at 4%, the answer is 944.09. So when I'm discounting at 3%, I'm getting 1098. When I'm discounting 4%, I'm getting 944.45. I'm supposed to look at this figure, right? So I can use the unitary method, and this is called linear interpolation. So I can say for 1% change, the change in the present value is 153, right? How much change I require in percentage to for the difference of 45.69? Why 45.69? Because I'm moving from 1098 to 1053. That is the answer. That is the present value I'm looking for. So for 153, 1% change is there. For 45.69, how much change is required? 3.29 change is required. So that is your answer.
Sir, can you please go back to the question slide?
Sure.
Lot of hit and trial method where we have to identify and try on different percentage and find the 2% that it falls between, right?
Yes, that is what we are doing. So we are using the unit that is called linear interpolation, and the math I have used is called unitary method. Now in the textbook, someone had pointed out last time, I don't remember, that there is a formula given for this. You can remember the formula, but the formula does what I am presenting through images. Trust me, the formula does the same. Now the problem with remembering the formula is that if you mess up with one part of the formula, because the formula anyways are not easy to remember, you will mess up your entire answer, right? But if you remember the logic, you can always come close. You can always figure out what is going wrong in case you get the wrong answer. So that is why I'm using this approach. But you can, of course, if you're comfortable using the formulas, you can use the formula that as well. And I think someone was saying any two numbers. Yes, you can select any two numbers. You are absolutely, that is absolutely fine. You will get the same answer, right? So that is what I have done. I have used 3% and 4%, and I require 1053.12 as the present value, but I am getting 1098 at 3% and 944.5 at 4%. So that means that the discount rate must have been between 3% and 4%, right? Now, of course, I have the privilege of solving the question before the session. So I may take two different sides of discount rate. So one on the left side and one on the right side. But even if you take by mistake two discount rates which are falling on the left hand side, the answer should not be wrong. You still get the same answer. And this is the same approach that you have applied in IRR, trust me. So this is not something new, right? Right. So this approach is called linear interpolation. And then at the end, to arrive at that, I'm using unitary math, simple math, right? So the change you are getting is 0.29. You are already standing at 3%, so the answer is 3.29%. So I would request everyone to please practice this so that you can recall IRR, and that would anyways help us in that chapter capital budgeting, right? Yes.
सर इसको मैनुअली भी अगर करना हो, अगर even if we know the formula, sir, without a scientific calculator it will be very difficult because
It is going to be difficult. It is going to be
time
difficult.
period इतना ज़्यादा है.
It is going to be difficult. No, it is not going to be difficult because you will use the present value of annuity formula. Na? So all the 36.20 for 22 periods would be captured in one formula, right?
Sir, but 1 plus r raised to the power 22 की value निकालना.
No, you don't have to. See, what I'm saying is that, but that could always be done on the simple calculator, right?
Sir, but कितना time लगेगा उसमें?
ये सिंपल कैलकुलेटर पे हम लोग नहीं करते थे. हमें पहले जब सिखाया गया था तो हमें एक शीट दी गई थी, टेबल, जिस टेबल में सर हमें ऑटोमेटिकली मिल जाता था आंसर्स.
So in that case, so you know how to use the table. So you could have told me that. So that you can always use that. I will provide you tables in case I'm asking you to do it such way.
Okay, sir.
I will provide you tables. Tables are fine. So if you are used to comfortable, so I don't know. No one mentioned that during the annuity chapter, the time value of money chapter. So anyways, fine. You just put the table value for this factor. That's it. Then the math is very simple, right? So there are three ways now. You can use the Excel. You can use this, and you can also you say scientific calculator, or you can also use table values that to arrive at. That is also fine, absolutely fine. But when you look at the table values, please be very careful which table you are picking up, right? If it is a present value of annuity figure you are looking for, you should look at the present value of annuity uh, table, and there are two tables for present value of annuity, at due and at the end. So again, picking the right one is also important, right? So fine. The second question was, what is the current yield? Now that is very straightforward. The current yield formula is the coupon divided by price today. Again, coupon divided by price today. So if the coupon is 36.20, the price you are paying today is 1053.12. So the current yield is the division of this, of course. So I have not done that, but that is of course very easy to do it. 36.20 into divided by 1053.12 into 100, of course, to get it in percentage, right? Shall we move on, guys? I'm not. I hope everyone is getting what we are discussing, right?
Sir,
Yes.
sir, I am.
Yes.
सर ये कैसे डिस्काउंट का कॉन्सेप्ट चल रहा है
कौन सा बेटा?
सर मतलब यही मतलब 3% 4% फिर उसके बीच का लाना मतलब हाउ आर वी
बेटा
डूइंग
हमने ये
इट
लास्ट टाइम कर चुके हैं बेटा. एनीवेयर आई रिमेंबर, आई विल जस्ट टेल यू बेटा. देखिए, आप आपको एक्सेल यूज करना था, आप एक्सेल पे कर चुके हो?
यस सर एक बार ट्राई किया था मतलब
ठीक है, ठीक है. तो आप प्लीज प्रैक्टिस कीजिए सबसे पहले. तो चलो, मैंने 3% रैंडमली लिया है, ठीक है? तो सी अंडरस्टैंड व्हाट आई एम ट्राइंग टू आस्क हियर. All this, this image is fine, yeah. So let's look at this. Are you comfortable with this calculation that 36.20 is the coupon for 22 periods? वो तो आपको समझ में आया ना बेटा कृष्णा?
यस सर
ठीक है. आपको ये भी समझ में आया कि 22nd पीरियड के एंड पे आपको 1000 मिलेगा?
यस सर
ठीक है. हेलो.
यस
हाँ.
सर
तो आप समझिए, whenever you are investing in any security, that could be bond, that could be equity, right? You have some expectation. Now, because this is a contractual claim, bonds are basically a contractual claim. What is promised, you know. What you are going to receive, you know. So you are going to receive 36.20 over 22 periods at the end, and you are also going to receive 1000. So how do I know the YTM, that is yield to maturity? Or you can say, what is the earning I'm getting from this in terms of percentage, right? When I'm paying 1053.12 and I'm receiving 36.20, what is the yield I'm receiving in percentage, right? तो आपको नहीं पता है, तो आप क्या करोगे पता है? आप 3% लोगे रैंडमली. रैंडमली लिया मैंने 3%, ठीक है? एब्सोल्युटली रैंडमली लिया 3%. So what I will do, I will calculate the present value of all this 36.20 at 3% discounting at 3% for 22 periods using the annuity formula, and then I will discount 1000 using the simple present value formula for 22 periods. The future value is 1000. The sum of both, that is the present value of all this 36.20 plus the present value of 1000 today, the total has to be, the present value has to be 1053.12. If it is not, that means 3% is not the yield I'm earning. 3% is not the YTM answer. So मैंने 3% पे किया. So I will just now show you the math. When I'm discounting this 36.20 plus this 1000 future value at 3%, the present value is 1098.81. But how much I am paying today? How much present value is there? 1053, right?
Yes.
So then I know that 3% पे ज्यादा आ रहा है, तो मैं 4% डिस्काउंट करूंगा जिससे कम आएगा, ठीक है? So I have discounted now all the values at 4%. So the answer is 945.09. So now remember, I am looking for that discount rate where the present value is 1053.12. So that has to be between these two numbers, 3% and 4%, right? So
Yes.
this is called linear interpolation, because this is just calculation. These values are basically arithmetic work, that's it. So once you get it, then you just use this method. So when the change in the percentage in the discount rate is 1%, the change in present value is 153. But मुझे तो यहाँ तक ही जाना था. I need the answer here. So I am looking for somewhere here. I am looking for discount rate somewhere here. So how much change is there in the present value? 45.69. So I'm going to frame it like this. For the change of 1%, the change in present value is 153.7242. Once again, For change in the present value, that is 153.7 to 42, the change in percentage discount rate is 1%. I am looking to know the change up to here, from this to here, right? So if the change in the discount rate is 45 point, change in the present value is 45.69, what is the change in
Not audible.
discount rate? So if I use unitary method, I will get 0.29. So the change is 0.29 because I'm going from 3% to 4% and the change I got is 0.29. I should add because it is increasing this side on the timeline on this diagram, right? So I add
Yes.
0.9, so the answer is 3.29. If I use Excel makes it very easier for us to understand. So I will use rate formula. NPER is 22. PMT is the periodic payments, that is 36.20 every 6 months. I have put that at the negative sign. You can also use the positive sign. But if you use positive sign for PMT and future value, you use negative sign for present value. That is how it is, right? Present value is what I am paying today, 1053.12, and I am expecting 1000, right, after 22 periods, right? So if you use this formula, the answer is 3.277. So we have done it manually because cannot accommodate all the decimals while do it manually. I got 3.29, so I'm very close to the answer. So when you do it manually, of course, those decimals have impact on your answer. So I will verify when you are solving this manually, right? Right? So
Okay, sir.
3.29 is we got. I hope Krishna you got it now, beta.
सर
Yes,
एक
sir.
डाउट है
बोलिए बेटा बोलिए.
सर एक्सेल में हम जब सॉल्व कर रहे हैं ना 3.277 के लिए, तो एक्सेल बाय डिफॉल्ट आंसर 4 दिखा रहा है, फिर उसके बाद जब हम एक पॉइंट उसको आगे कर रहे हैं तब जाके 3.9 एंड देन 3.77 ऐसे करके दिखा रहा है. तो सर उसका कोई सॉल्यूशन है कि भाई वो डायरेक्टली पॉइंट में आंसर दिखाया हमें प्रॉपर?
तो उसके लिए आपको क्या करना पड़ता है, एक्सेल में मेरे पास जो एक्सेल है उसमें मैं पता नहीं अभी दिखा पाऊंगा कि नहीं, क्योंकि इसका पूरा वर्जन अलग होता है इस ओएस के लिए. बट उसमें क्या होता है कि एक ऑप्शन होता है एक्सेल की प्रॉपर्टीज में, और यू जस्ट गूगल इट दैट व्हाट इफ यू वांट वैल्यूज ऑलवेज इन 2 डेसिमल्स, तो वो डेसिमल्स को ओपन करना पड़ेगा आपको एक्सेल में. वो ऊपर
सर
एक ऑप्शन होता है.
हो जाएगा, उसमें ऐसा करना होगा मयूर, टॉप लेफ्ट कॉर्नर से तू पूरी एक्सेल शीट सिलेक्ट कर ले, फिर होम पेज पे डेसिमल आएगा, उसमें से पहले डेसिमल करके फिर सम सॉल्व करना स्टार्ट कर जब भी मतलब.
हाँ.
Okay, got it,
And
got it.
there is another way. Every time you have to do this, there is a option, I think, in Excel properties and features. But that because I have a different version, I may not be able to show you. But if you still cannot figure out, let me know. I will definitely tell you over the WhatsApp, right?
No, sir, I got it. निश्चित ने जैसे बोला ना वैसे कर दिया.
हाँ वैसा भी कर सकते हो. यस, आप पूरी शीट को पहले सिलेक्ट कर सकते हो. यस, so the current yield is very easy to calculate. So Krishna, I'm moving ahead, beta. I hope you are fine now with this. So I'm still requesting,
Yes, sir.
please practice. This Saturday again we are going to have a remedial session for bond. So this week we will focus on bond valuation. So please start practicing with me, right? Okay. So now this is also a very good question. 30th question. So can someone help me? How do I solve this question? The question starts from here. In fact, this is just information given. The question starts from here. So please someone help me. How do I solve this? Yes. Mayur or anyone. Maybe Dhruv can also help us. Please guys, someone participate.
Sir, in this question, the coupon rate is 4.9% and we are buying it for 930 rupees, a dollar. So this means that it is being sold on discount. So here the bond has a maturity value of maturity is 10 years. So the rate which the YTM we need to find. So from this information we can conclude that the YTM will be greater than the coupon.
That
Because
is, yes,
because
yes, yes.
because it is being sold on discount, so from this we can our calculations will be more easier.
You can, if you do it manually, then it becomes easier because you can estimate the values above 4.9%. That is what he's saying. Absolutely fine, right? So a very simple question, this very similar to the last question, but in this case the coupons are annual, so the coupons are paid or the interest on bond is paid annually, right? So what is YTM again? That is the question. So all these 14.9s for 10 years, and again at the end of 10th year you will receive 1000. The present value should be 930. So you can take two different numbers, or you can use Excel to do this, right? If you use Excel, that is very simple now. So I have done the math again, just once again, just to show in case someone wants to practice. I have taken 5%, and when I discounted 5%, the present value was not 930. The present value was 992.28, right? And when I'm discounting at 6%, the present value is 919.04%. So can I say for 1% change, the change in the present value is 73.24. I am looking for 930. See here. What is the change I require? The change I require is 62.28. So I will use unitary method now, right? So for 73.24%, 24 rupees change in the present value, the change in discount rate is 1%. For 62.28, how much change is required here? That comes to 0.85. I'm going from 5 to 6. The change is 0.85. So 5 plus 0.85 is close to what we did using the Excel formula. So 5.85 we got, right? So you can also do this manually. That is what I'm saying, right? The second question, if someone could help me, Mayur, if you could help me, second question is a bit different. Yes.
It's showing that YTM on your bond will be declined by 1%. Means basically the discounting factor is declining by 1%. It shows that the people will will be more inclined towards investing in the other securities in compared to this bond.
Yeah, that is
So
fine. But how do we solve this question? The question is that what if you decide to sell this bond after 2 years and the yield to maturity has changed, right? Yield to maturity has changed by 1%. Means the market interest rate has changed by 1%, right? What is the HPY? Now, what is HPY? Understand? HPY is basically the yield I have generated by holding this investment for whatever period given. So because I am selling this after 2 years, so at time zero I am purchasing, and after 2 years I am selling. So I can say I have hold this investment bond for 2 years. So what is the income I have generated for holding this investment, this bond for 2 years? That is the first question, right? So let us just look at the math, right? So 5.854 was there, right? It has declined by 1%, so it is 4.84. So now you know YTM. So the question is, what is the price today? What price will your bond sell for today? So because you know YTM, you know all the what I say, the coupons, that is 49, I think. Yeah, 49. So this is time 2, and now time 10. The YTM is now 4.84. Right? So you know the 49s, and you also know the face value 1000. So you will discount all the 49s for 8 periods and 1000 for 8 periods using 4.84, because now you know YTM, but you don't know the price today. So the price must be 1003.64. So in this question, this is a bit different than the last question. In the last question, YTM was not given. In this question, the bond price is not given. So the bond price is 1003.64 for 8 periods. Please don't mess up with this. You are doing this after 2 years. So the period left now is only 8 periods or 8 years. And YTM is 4.84 now because it has reduced, right? Any questions you have, please ask me. Because that's then we will look at the holding period yield. Yes. Right, this is very straightforward. So YTM has
1003 जो है ये future value है या present value है
present value beta, present value है. This is what the bond price should be today. This is the price should be there today. तो मैं सबको डिस्काउंट करूंगा ना 4.84 से, तो 1003.64 आएगा present value today.
Okay, but sir 930 क्या है फिर मतलब
930 was at time 0. Now it is 2 years after from that point. तो मैंने यहाँ पे जानबूझ के 2 लिखा क्योंकि 2 साल चले गए हैं. तो 2 साल के बाद उसका प्राइस क्या होना चाहिए? If YTM is 4.84%, तो मार्केट में this bond must be selling at 1003.64 at time 2, right? Because 2 years have lapsed from the day you had purchased. 2 साल पहले आपने खरीदा था, आज आप बेचना चाहते हो. The question is what किस प्राइस से बेचना चाहिए? That is what we are calculating. So because YTM we know, we can say that we should be selling this at 1003.64, right? Let's look at the second part. What is the HPY, that is holding period yield on this investment? That is very straightforward, right? Because see, you had invested for 930 and now you are selling this for 1003.64 and you have also received 49. So the holding period yield is nothing but the interest, the internal rate of return of this information. That is, you have invested 930 and you are going to sell at 1003.64. So same YTM formula, but now YTM, it is not called YTM, it is called HPY, because this is you have something generated in over 2 years time. So the same math, 930 is the present value, this is the future value, and the coupon is 49. This is for only 2 years, remember, because you are selling after 2 years. So the holding period yield from time 0 to time 2 is 9.606%. I have done the math also if you want to see that. What is 930 is what I'm paying at time 0. 1003.64 is the price at which I'm selling after 2 years. What is the yield I have generated? मैंने कितना percentage में कमाया? That is what I'm asking, right? So I can use two different rates, 9% and 10%, and I can apply unitary method. So the answer is 9.057, and on Excel it comes 9.056 because of decimal. So the answer is matching. I hope everyone is getting this right. This is just repetition of what we have been discussing for some time now. Okay. Now we are going to the last question. Okay, I have also put the answers on Excel, how it looks. So in case you want to solve it on Excel, you can always look at this, right? Sorry. The last case should not take much time. I mean, we should discuss the logic of this, but the calculation should not take time. Please, someone help me. How do I solve this question? Not Mayur, not Drew, because you guys are participating. Let me ask someone else. Let me ask Devanshu Beta, Devanshu Mehta, please. How do I solve this question? What is this question all about, Beta? Devanshu, please help me.
Hello, sir.
Yes. How do I solve this question?
Can I get a minute to read it, please?
Sure, Beta. But I have given this reading last week only. Please do it faster, Beta.
Yes, sir. Sorry, sir.
Yes, please. Yes, Devanshu, yes. What is this case all about? Yes. Let me make your life easier, right? You have a liability of 10 million, I think 100 million, sorry, 100 million, right? You have a liability of 100 million after 5 years, right? And the YTM, the market return is 8% right now, right? And the coupon is also 8% given in the first question itself. So the coupon and YTM are same, right? So the question is, you have a liability of 100 million after 5 years or 10 periods, because the coupons are paid semi-annually. How much worth of bonds, face value worth of bonds, you should buy today so that you can pay off this liability, right? Yes, that is the question. So which formula we should
Yes,
use?
sir.
Yes.
Sir, should we use the present value formula for?
Yes, you are absolutely right. You are absolutely right. Wonderful, Beta Devanshu. So see, guys, always remember, when the bond's YTM and coupon is same, that then you can say the bond price today must be the face value, because when the YTM and the coupon rate is same, that means the bond is selling at, because why would you invest for more, or why would you pay more if it is fetching you the same return than compared to the market? Okay. So if the market is giving you 8% per annum, and if the bond is also giving you 8% per annum, then why would you be willing to pay more or less? So that means the bond must be selling at face value, right? Because the risk is same across all the securities. So if the other securities, similar identical securities, are giving you 4% semi-annual coupon, so or interest, then the YTM or the for this bond has to be same. So 4% is the semi-annual coupon, right? Because the YTM and coupon are same, again, the bond must be selling at face value today. Okay. So I want 100 million after 10 periods or 5 years. how much I should buy or how much worth of bonds, which is face value, I should buy today. So simple present value formula I'm using. You can also use the annuity formula, but the answer would be same. The reason is the coupons are same as interest rate. That's why. And the present value and the face value, future value, is also going to be same. So that's why the answer is, if you use simple present value formula or you use annuity formula, the answer has to be same. So that means, yes, someone has a
Sir, I have a
question?
doubt. Yes, sir. Sir,
Yes,
why will the answer be same for annuity formula, sir? Because annuity के अंदर तो अपन कूपन को भी डिस्काउंट करेंगे एंड फ्यूचर वैल्यू को भी डिस्काउंट करेंगे, मतलब यहाँ पे एक ही
but
वैल्यू
but
डिस्काउंट कर रहे हैं एंड वहाँ पे बहुत सारी वैल्यूज डिस्काउंट करेंगे, तो सर फिर सेम कैसे होगा?
मैं बताता हूँ the problem limitation this time we have is this board we don't have, right? I'll just help you. Let's say you are investing 100 rupees here. Let's say the interest this bond is paying is 10%. So after let's say the face value is 110. Let's say the face value is 110, or this is a saving account, let's say, right? What is the future value, Mayur?
Sir, it's 110.
What is the present value?
100.
Right? So if I say that this bond is giving you 10% and the market is also giving you 10%, so I am choosing this 10%, not this one. Huh? What if I discount this 110 with this 10%? What is going to be the present value?
100 itself.
Right? So when you are discounting at market return and the coupon and market return is same, then the face it must be selling at face value. That is what I am saying.
But sir, here we haven't considered the intermediate payments ना, मतलब जैसे सेविंग अकाउंट आप बोल रहे हैं तो ये समझो अपने 1 साल के लिए किया है, अगर 10 years के लिए हो तो
10 years
बीच
के
में
भी
कुछ
आप
पेमेंट्स
टेस्ट करो बेटा मयूर, घर पे जाके आज या क्लास के बाद आपको समय मिले ना, तो you do this. You discount all this. You discount this 100 million using coupons as well as this future value, this face value. The answer must be this. I'm telling you.
Okay.
Because understand. So let me show you what is the interest you are receiving. 10 rupees, right? So this 110 is made up of two things, right? 110 is made up of two things: 10 rupees and 100 rupees, right? So what I'm saying is that if you discount the coupon separately and also the face value, the answer has to be same. Try this, trust me, mathematically. When you do it mathematically, you will understand the logic. Because it is like you are discounting the returns at the same discount rate, the same return percentage. So if the coupons are giving you 10%, and if the rate is also 10%, it has to be face value today. The present value has to be the future value today, right? So that is what it is, right? So please try this. I would request you to do this practice once so that you understand better, right? Okay. So let's come back to this now. Because I can say today that the bond must be selling today at face value, because the coupon and the that is coupon of this bond and the market return, that is YTM, are same. So that means I should buy bonds worth rupees 67 million. I'm not reading the entire number. So I should buy bonds having a face value of 67 million today, right? So the question is how it would become 100 million after 10 periods or 5 years? Because when I'm buying the bonds worth of 67 million today, I will receive coupons. I will receive coupons 10 times, right? Every 6 months. And then I will reinvest them. And I will reinvest them at 8% per annum, or I can say 4% semi-annually. So every time when I receive coupon, I will reinvest. So with coupons and the accumulated interest on all those coupons together with the bond face 67 million has to be 100 million. So today when I'm investing 67 million, I will receive coupons and then those coupons are reinvested, right? So then the future value has to be 100 million. So that is how you are arranging this, right? Not something new. The same ideas we have applied in time value of money chapter for the, if you remember, tuition fees and everything, right? So yes. So that is the answer. The second question is, yes, what is the second question, guys? Please, someone read. let me ask Ankita. Ankita, what is the second question? How do we solve beta? Ankita Majumdar, please.
Yes, sir. Yes, sir. Sir, here we will
Assume the interest rate remain constant, that is 4% interest rate, or YTM is 8%, let's say. Thus, when the company reinvests the coupon payments, मतलब जो हर बार coupon that is 27, you see, so I'm investing this much, right? I'm investing, or I'm buying bonds worth of this much, right? So how much coupon I will receive? I will receive this much coupon. So the question is, when the company reinvests the coupon payments, मतलब market में आप invest करोगे, it will reinvest at current YTM, that is 4% return, right? What is the value of portfolio in 5 years? Tell me. What is the value of portfolio in 5 years, Ankita? Please give it a try, beta.
Sir, here we will use the future value of
Annuity.
annuity, future value.
So the answer would be yes. The answer is 100 million only, beta. Because that is how we have arrived at this value, right? So it is, so in this case we came back. So in this case we are going forward. So because the market, so why the answer is matching? Because the coupon and the market returns are same. So because we have back calculated to arrive at coupon value, the future value of all the coupons and the or of course the interest on all the coupons together has to be $100 million. So the value of the portfolio in 5 years should be 100 million only. Has to be 100 million, right? Right. So it is like this, beta. It is like this, beta. Okay. I want $100 million for my tuition. $100 million for a tuition fees too much. Let's say I need 1 million rupees for tuition fees after 5 years. How much I should invest today? Let's say you are getting 22 something, 27 something, right? Now I'm asking how much you would have if you arrange 27 every quarter or every 6 months. Of course, the tuition fees that you require after 10 years. So we came backwards and now we are going forward with the same interest rate, with the same coupon. Why the answer is same? Because the coupon rate as well as the YTM are same. So if I'm receiving at 4% interest on coupon, I'm also reinvesting at 4% 6 months. And that's why it is like going back and going forward with the same rate. So it has to be the same, right? I hope I'm making sense. Dhruv, Ayushi Pandya, Divesh Rathi, Devlina Bajaj. I hope are you getting what I'm saying?
सर ये
Yes,
100
sir.
मिलियन इसका आंसर कैसे होगा? 27 समथिंग है तो उसका डबल भी तो 100 मिलियन नहीं होगा? आई मीन ये सेमी एनुअली कैसे हुआ?
नहीं 27 लाख है, 2.7 मिलियन है, सॉरी 2.7 मिलियन है, 27 लाख है ये. हाँ तो
राइट
2.7
27 लाख.
तो 2.7 मिलियन है ना. सॉरी, यस मयूर
सर आप इसका एनुअल आंसर जो बोल रहे हो 100 मिलियन बोल रहे हो ना?
हाँ 100 मिलियन होगा. पोर्टफोलियो का वैल्यू 100 मिलियन होगा.
सर तो ये 27 लाख 100 मिलियन में कैसे होगा? आई मीन मल्टीप्लाई बाय 2 भी करो आप, इसका एनुअली भी गिनो तो भी आंसर तो शायद 100 मिलियन तो नहीं होगा.
नहीं, पोर्टफोलियो का वैल्यू बोला है. पोर्टफोलियो क्या, तो मेरा सेविंग अकाउंट में जो पैसा, मैंने सेविंग अकाउंट में कितना पैसा डालूंगा, मैं पोर्टफोलियो में कितना 67 डाल रहा हूँ, और 67 पे मुझे हर बार कूपन कितना मिल रहा है? 2.7 मिलियन मिल रहा है. 2.7 मिलियन मुझे कितनी बार मिलेगा? 10 बार मिलेगा. हर बार 2.7 मिलियन पे इंटरेस्ट मिलेगा प्लस 67 मिलियन. सो टुगेदर इट इज 100 मिलियन. आई एम सेइंग portfolio means what, beta? Portfolio means what I have invested as capital plus the interest, and in the interest on interest for 10 times.
तो सर ये 27 मिलियन जो आप आया वो डायरेक्टली मल्टीप्लाई बाय 4% किया तो वो तो फिर एक साल का हुआ ना.
हाँ तो वो yes.
Sir, actually I calculated the future value of the 67 million taking PMT as 0, then it comes out to be 100 million.
That is what I'm saying. Yes. So because the YTM and the coupon are same, that's why. See, I got the answer. I received a file from the this thing. So this is what you get. See, I will just show you this just so that everyone is able to follow this, right? When the YTM is 8% per annum and the coupon is also 8%, you see the portfolio value is 10 million, 100 million only. You see, because these are 10 coupons. You see, these are 10 coupons, right? So, and these coupons are reinvested, right? You see, and so what is the value of this coupon? What is the value of this coupon after 5 years? What is the value of this coupon after 5 years? So and these are happening at a different point of time. So together it is 32 million. And I already had 67 million as my bonds I had purchased. So together the value of my portfolio, that the money I require to pay the liability is 100 million only. You see? So when I'm discounting at the same rate, answer has to be same. When the discount rate as well as the coupon are same, it has to be the same, right? I hope you are able to follow this, guys.
सर ये
Hello?
मास्टर का सॉल्यूशन आप भेजिएगा ना प्लीज, क्योंकि ये
हाँ
सॉल्यूशन
श्योर भेजूंगा, श्योर भेजूंगा। मैंने ये पता नहीं ये सब भेजा होगा शायद, लेकिन ये नहीं भेजा होगा शायद, ये नहीं भेजा होगा, ये नहीं भेजा होगा।
हाँ ये नहीं भेजे सर एक्सेल वाला,
क्योंकि मैंने इसलिए, क्योंकि आप कोशिश करो इसलिए मैंने नहीं भेजा था, बट ठीक है। बट आपको समझ में आ गया ना, आप फॉलो कर रहे हो ना मैं क्या बोल रहा हूँ। इट इज लाइक दिस बेटा, कि आपको समझो कि 5 साल के बाद 100 रुपए चाहिए और हर 6 महीने पर आपको कितना आज पैसा इन्वेस्ट करना चाहिए जिससे आपके पास 5 साल के बाद 100 रुपए हो, ठीक है। और जब मैं 100 रुपए चाहता हूँ तो मैं ये भी चाहता हूँ कि मैं जो हर 6 महीने में इन्वेस्ट, मतलब हर 6 महीने में मुझे जो कूपन मिलेगा ना, जो एक्स अमाउंट में इन्वेस्ट करूंगा उसके कूपन मिलेगा ना, वो कूपन को भी मैं री इन्वेस्ट करूंगा, ठीक है। तो टुगेदर इट हैज टू बी 100 रुपीज। तो मुझे कितना इन्वेस्ट करना चाहिए? लेट्स से आई एम इन्वेस्टिंग 67 रुपीज टुडे। So 67 rupees plus the coupons, the interest I am receiving on this 67 rupees every 6 months, and that is reinvested. So again, that all those 27 or 2.7 also fetches me some interest. So together, this plus this and interest on this together, it has to be 100 rupees, right? So I'm going backwards. I'm getting 67 rupees. If I go forward, it has to be 100 rupees, of course, because it is the same computation I'm doing, right? With the same returns, right? The rate of return, right? So this is one thing. So what is the value of my portfolio? It has to be 100 million. This is interesting. Let us look at the C equation, please. The C equation says that assume that immediately after purchasing the bonds, the interest rate either rise or fall by 1%. So what is going to be the portfolio value in 5 years under these circumstances? So let's say the interest rate goes up by 1%. So it was 8%, now it is 9%. So every 6 months I receive 4.5. So now this coupons that I'm going to reinvest will give me 4.5% is every 6 months. ठीक है ना? तो मेरे पोर्टफोलियो का वैल्यू कितना हो जाएगा? 33 million plus, just a second, plus 67 here. So it is more than what I need because the market is giving me more return. Market is giving me 9% is return than my coupon, right? तो अब मैं जब कूपन मिलता है तो उसको इन्वेस्ट करता हूँ तो 9% पे इन्वेस्ट करता हूँ, तो ऑब्वियसली मेरा पोर्टफोलियो का वैल्यू मुझे जितना चाहिए उससे ज्यादा होगा, राइट? Okay. What if the YTM is decreasing? With the YTM is decreasing, then the coupon, this is the coupon value. So I am using the future value of annuity form if someone is not able to recall. ठीक है, मैं reinvest कर रहा हूँ इसलिए future value of annuity formula use किया, ठीक है? So if I am reinvesting at 3.5%, now the accumulated coupons and the interest on coupons is 31 million. Plus I already had 67 million worth of bonds with me. So together they are 992. So it is less than what I need. I need 100 million. I have only 99 million right now, right? So this is just the calculation. I will definitely share this with you guys. Please ask me questions. Otherwise, we can go to the next chapter because this is a bit challenging in terms of solving, but we need to do difficult questions, right? We cannot do the same question that you may have studied earlier. Yes, hello. Any questions, guys? Please ask me. Divesh Rati, do you have any questions, beta?
सर ये क्वेश्चन है ना मुझे थोड़ा कम समझ में आया, तो इज इट ओके कि आप ये वाला रिपीट करें एक बार जो एक्स्ट्रा क्लास होगा उसमें, क्योंकि
हाँ,
ये
उसमें तो करूंगा, लेकिन अभी क्या डाउट समझ में नहीं आया मुझे बताइए। तो अभी मैं जो छोटा सा है तो मैं समझा सकता हूँ 2 मिनट में।
सर छोटा नहीं है एक्चुअली, कॉन्सेप्ट ही मुझे समझ में नहीं आ रहा है कि हम बैक और फॉरवर्ड जा रहे हैं तो उसमें सेम कैसे आ रहा है।
सेम इसलिए आएगा कि आप समझो हर महीने 5-5 रुपए बैंक अकाउंट में डालते हो, ठीक है? जस्ट अ रफ एग्जांपल। तो समझो 5 साल के बाद 100 रुपए हो जाता है, ठीक है? अब मैं उल्टा कैलकुलेट करूंगा कि ये 100 रुपए हो गया तो हर महीने मैंने कितना डाला होगा, तो 5 ही आएगा ना,
राइट?
क्यों 5 आएगा? क्योंकि द कूपन रेट, द इंटरेस्ट रेट इज सेम. सो इन दिस केस द कूपन रेट एंड इंटरेस्ट रेट इज सेम. So whether you go forward compounding or you come back in discounting, the answer has to be same because the coupon rate and interest rates are same. इसलिए तो मैं बोलता हूँ कि आपका जब कूपन का रेट और इंटरेस्ट रेट सब सेम होता है ना बेटा, देन दैट मीन्स दैट द बॉन्ड इज सेलिंग एट अ फेस वैल्यू इन द मार्केट टुडे, बिकॉज why would you pay more or less for the bond which is giving you same return as the market, understand? ठीक है ना, मार्केट में आज कोई सिक्योरिटी मिल रहा है वो 3% दे रहा है और ये बॉन्ड भी 3% ही दे रहा है, तो मैं इस बॉन्ड खरीदने में कम या ज्यादा क्यों दूंगा? कम तो कम में तो मैं खुश रहूंगा कम में तो, लेकिन कम में वो क्यों बेचेगा, डीलर क्यों बेचेगा? क्योंकि रिस्क सेम है ना, ठीक है ना. So that is the construct, the theoretical part, and the practically also it works out same because the discount rate and or the interest rate YTM is also same. That's why. And then the question is, let's say you are receiving coupons. What if the interest rate goes up? So interest rate, when the interest rate goes up, you receive more interest on the coupons you are investing every 6 months, and that makes it 33 million. So 33 million, and then you already have 67 million worth of bonds. So together it is more than 100 million. Why? Because market is giving you more return now, 9%. है ना? एक बार फिर से कोशिश करना, मैं जरूर समझाऊंगा ये next class में. But please everyone solve this question, understand, and let us discuss that, right? So this is in bond, guys. I wanted to discuss lot of questions, but you know we are running out of time. You know that. So I would request you to practice, and if you have doubts, please write in your questions in the group so that I could solve it and send it to you, or we can discuss that on Saturday regular session whenever we are comfortable, right? So now we are going to discuss a very important chapter, equity valuation. Now we do not have time, as you could see. So what I would do now is that I will just discuss the basics of equity, and then can you see the equity file, guys? Can you see the equity file? Hello? Guys, can you see the equity file? Yes. So we will just recall the fundamentals of equity because some of you may not be able to remember the basics or the words or terminologies of equity. So we will focus on that, and then I will discuss the methods next time, right? Very interesting chapter, a very important chapter. So please, everyone, I hope, you will ask questions and come prepared, right? So let us understand what is common stock. What is common stock is the word they use in America, right? It is equity shares. So when the shares are held by public, that is the shares of a company are held by public, it is called common stock. In India, we call it equity shares. Very straightforward. What is primary market? Can someone tell me? Very basic fundamentals we are discussing right now. What is primary market? Anyone go, please.
Sir, when the shares are issued for the first time in the market.
So when the company is raising money for the first time from the public, it is done through the primary market, right? So in the primary market, there are two kinds of issues. One is called IPO and second is called FPO. So when the company is raising money for the first time, means in the past company has not raised money from the public in the past, right? It is called IPO, initial public offering. So after the IPO, the company shares may be listed on the stock market, right? So the company will also carry out the procedure to list their shares on the stock market, right? And it could be on all the stock markets in the nation, or it could be on few stock markets in the nation. Depends. That is company's choice, right? Ideally, you will go to the market where there are more traders and there are more people buying and selling shares. So ideally, we do in India, we do it on BSE and NSE, right? Okay, what is FPO? Also called follow-on public offering. So when the company has already raised money from the public in the past and the shares are already listed on the stock market, but company wants new money. So for raising new money through new issue, company issues more shares, but never exceeding the authorized capital. That is called follow-on public offering, sometimes called following public offering. That is FPO. So IPO for the first time and then the shares are listed. FPO is second, third, fourth, fifth time, right? Follow on public offering. The third term is secondary market. Secondary market is a marketplace where the shares or securities are traded by the investors among themselves. So company is not involved, right? So the traders like us or the buyers and sellers like us exchange shares through secondary market. So NSE, BSE, we know, right? Dividend is the periodic cash distribution. We know that, so I'm not discussing this. Dividend yield is dividend per share divided by market price per share into 100, if you want that in percentage. And last is price earning ratio. Price earning ratio is market price per share divided by earnings per share. So what does this mean, guys? What does this price earning ratio imply? Can someone discuss this with me for a minute? Because we are anyways, I don't want to go ahead. Yes. Yes. What is price earning ratio? Please, someone. What does this imply? What does this mean?
Sir, it basically means that whether the stock is like we can consider it a value stock or a growth stock. For example, if the price earning ratio is low, it means it is more of a value stock and it is expected that the price will rise in the future. And if it is price and earning ratio is high, then we can consider it as a growth stock.
Growth stock. So very good, Drew. Thank you so much, Drew. So when the price earning ratio is higher, that means for earning 1 rupee, the investors are willing to pay more, right? Right. So that is what we are going to discuss this over some time now in the coming session. So very interesting chapter. Please come prepared. I had mentioned what you have to read. Again, I will mention before the next class. So please read this, right? So these are the methods that we are going to discuss. These are theoretical methods. So I will just mention that this is where our focus is going to be. So there are three approaches: balance sheet approach or balance sheet methods, discounting cash flow methods, and comparables method. So we will emphasize upon this two and these three methods, right? So this is just theory. I will discuss that for maybe 5 minutes, right? Thank you so much, guys. Have a good day. I should end the meeting now. Thank you. Bye.
Thank you, sir.
Thank you. Yes. Please come
Thank you, sir.
prepared now. Please start. Yes. Yes. Thank you so much. Please read. Right. Please. Thank you.
Material that you shared today in class.
Yes, I have shared the. I have already shared the PPT for bond valuation. Only this page is left, so I will add this page and share it again for sure. Thank you, beta. Yes. Yes. I will do that.
Thank
you.
Thank you, sir.
Thank you. Yes, beta. Yes. I'm ending the meeting.